Let's talk about one main financial loans and if it is worth attention or not. You may consider one main financial if you are planning debt consolidation, medical expenses, household bills, home improvements and auto purchases. Hi, I'm Slava. Welcome to my channel about money. Let's check the details. First thing you may be curious about is the minimum credit score. It looks like there is no need for any credit score. You will find out why there is no need for credit score at the end of this video. One Main Financial offers three types of personal loans: unsecured personal loan, secured personal loan, and auto loan to buy a vehicle. These are all installment loans. You should pay the amount of money you borrow with interest. There will be several fixed monthly payments. The loans are different from revolving loans like credit cards. In case of credit cards, you can make minimum monthly payments and therefore bury yourself deep in debt. The loans discussed in this video consist of the loan amount divided by a set of equal payments, plus interest and fees. We should talk about fees with more details. First, there is an origination fee. The amount of fee depends on the state you live in and can be flat or some percent of the amount. The flat fee is in the range of $25 and up to $400. The percent-based fee can range from 1% to 10%. The name of the fee depends on the state. In some states it is a loan processing fee. In others it is called document preparation fee. It can be credit investigation fee or other similar names. But it doesn't matter. The idea is the same. The range of numbers is very high. 410% is absolutely crazy. It is just to take the loan. There will be interest on top. Late payment fee ranges from $5 to $30 or 1.5% and up to 15%. Non-sufficient funds fee is $10 and up to $50. If you take the loan, make sure to find the mentioned fees. The numbers may change, but once you sign documents, they shouldn't change anymore. Loan amounts may vary based on your credit worthiness. If you have a low credit score, creditors don't like risks and don't like you. The amount of loan may range from $1,500 and up to $20,000. There are state-specific minimum amounts. For example, in California the minimum amount is $3,000. There is also a maximum for unsecured loans. In Texas, for example, it is $8,000. The interest can range from 18% up to 36%, which is very bad. The term of loan can go up to 5 years or 6 months. Everyone's situation is different, but I wouldn't take a loan under these conditions. 36% APR for a loan is a crime. Don't take it unless you really have no other options and need money. Make sure you can guarantee that you will be able to pay off the loan. Be responsible. The target audience is people with poor credit history. As a rule of thumb, every time a company targets low-income people, it considers them as a product, not as a customer. If you are consolidating credit card debt, you may want to look for a credit card with 0% intro APR. There can be a 3% balance transfer fee, and then you may pay it off with the same large chunks of money every month. It is definitely way better than a 10% origination fee, but you will need to be approved for the card. and it may be easier to say than to do. Generally, I am against loans with interest above, let's say, 5%. That's all. Bye.